A subject that we'll cover a little bit deeper at a different time, and maybe at a future interview too. We'll discuss kind of the trade that really blew you up and was a tremendous trade you did going back now about maybe 12, 13 years. But why don't we leave a little bit of a hook for a future interview from that perspective? Why don't I switch?
Yeah, that might be 30. That might be 30 years. I don't know if I call it a trade, but yeah.
Why don't we, you mentioned Elon, Daddy Elon. So lots going on relative to the amazing growth of Tesla, maybe more challenged this year. But broadly speaking, that, his persona, Twitter, what's going on there. How would you look at that from either the outside looking in or the opportunity from an investing perspective?
So are we talking about Tesla and all of them, or are we just talking about Daddy Elon, the person?
Why don't you cover a little bit of both?
Okay, so I guess, in a high interest rate environment, any kind of high flying tech company like a Tesla is going to get hit regardless. Now, yes, maybe Daddy Elon had to sell some shares, and who knows if he's margin shares to buy this Twitter, and who knows if something will happen, like people speculate. Who really knows what's true and what's not, unless you're his broker, or you're doing the deals, or you're him, or his his close homie, his five or whatever. But so Tesla long term, I guess, is a technology and energy storage company and an AI company. Now, yes, it has an automobile. Now, right now, in a high interest rate environment, I would imagine the market is going to value it closer to an automobile company like a Ford and a GM. And he also has a lot of growing competition because he was the first one to make the EV really work. So now, of course, GM and Ford and all them are going to try to copy it. But there are things that can be done with Tesla where it could become integrated with Twitter, where Twitter is the payment network. And there's an app of Tesla, and it almost works like how you have Uber. Now Twitter is a financial thing because it has distribution. So distribution is important. So the reason Daddy Elon, I think, would want to buy Twitter is distribution. So him and his homies like Larry Ellison and all them invested, and Binance's people or whatever, it's distribution platform. So if you can integrate crypto payments, and you can integrate like payments to say ride sharing, like you call a Tesla and it comes, and maybe even eventually it's self-driving when the laws change, that could be massive. So people are underestimating the synergies of the massive network between, say, like a Twitter, a Tesla, and even like, what is that, the Starlink satellite network of SpaceX. Mm-hmm. So that's massive synergy. And even if who knows if it pans out, but Neuralink, when we upload our consciousness to the cloud or whatever that is, who the hell knows? So this could be like a massive multi-trillion thing with all the synergy, all the companies combined. So everybody says, oh my God, Daddy Elon is spread thin. Now he adds Twitter, and he was doing SpaceX, and he was doing Tesla, and he's doing boring company and Neuralink. But if you really look at the core, they actually all tie in to one massive vision. And his dream is to be on Mars. It's a distribution network of humans and technology all combined into one that could even lead to Mars and payment of, people laugh at me, but Dogecoin on Mars, or maybe not even Dogecoin, maybe a Twitter coin or Daddy Elon coin, yes, or Gitcoin that's based off of the Dogecoin blockchain.
There is no doubt. I was going to get to some of that a little bit later. And I know people have laughed at Doge for a number of years. I never did. And again, I look at the number of people that were fervent supporters, and I looked at what Elon was doing in it and what they're doing behind the scenes, if you know the developmental community, and who knows, maybe it goes to shit, which again, it's been a terrible year broadly for crypto. But there are things going on that, we shall see. Why don't we leave it at that?
Yeah, you were one of the few people who didn't laugh at the Shiba Inu talk. Remember how I was talking up Shiba Inu? A handful of people said, this crazy fucker keeps talking about Shiba Inu, and they actually bought it and they made a multiple.
Yeah, that was one of my greatest returns of the year prior. Unfortunately, was one of my greater losses of the past year. Whether I'm net positive or negative on that, well, you'll have to try to figure that out. Which does, I can't have a discussion. I know I haven't done as many recently, but I do have to bring up broadly Bitcoin, kind of the king of all cryptos. So we have a lot going on. This has been a terrible year. There's additional regulation coming in. There's forces at work. Ethereum is now not proof of work and proof of service. What do you think? I think we each have unique opinions relative to Bitcoin. I think part of it's going to be that hedge fund managers and others kind of blew it up from a certain size And then some other forces work to take it to another level, and now it's back down. But what's your opinion about how the last year has played out, and what do you think moving forward?
Well, yeah, it goes back to the market, supply and demand with the market infrastructure. If there's more buyers and sellers within the infrastructure, you're going higher. If there's more sellers and buyers within the infrastructure, you're going lower. It all plays down to that. So yeah, so I've been criticized highly like a long time ago for saying Bitcoin was like digital gold. Now I know that the market cap of gold is much higher than Bitcoin's, but the nominal price of Bitcoin is higher than the nominal price of gold. And I always said, okay, so if Bitcoin is said digital gold, then what should the premium or discount be in the nominal price? And I guess, you know how they have like a gold to silver ratio and all that stuff? Man, maybe one day there'll be a Bitcoin to gold ratio as far as the nominal price.
Okay, but I'm going to put you on the spot a little bit. 1 year from now, the end of 2023, do you think the price of Bitcoin will be up from what it is now, neutral, or down?
So we're at like 17K-ish. I could see Bitcoin having a rally when if the NASDAQ rallies 50% to 30,000. And then it pulls back down to 15 to 17K. And before that happens, we could have, but I don't know what the catalyst is. So there'd have to be a catalyst like Tether blowing up or some big exchange blowing up or like some big
that never happens.
Firm blowing up that would push us, down. All these people say we're going to 8,000, 10,000. I think we need a catalyst. What's the catalyst to force that selling? Because remember, we've come down from 69,000. So almost everybody who wanted to sell sold. Like I saw some guy spreading FUD saying MicroStrategy sold all this Bitcoin. Yeah, they sold Bitcoin, but they bought like 2 or 3 times the amount they sold because they wanted to readjust their tax basis because there's no wash rule in, trading cryptos right now. So that was FUD. So the question is what should Bitcoin be valued at? I always get back to what somebody wanted to pay for the thing.
Yeah, that's true. And I do have some further Bitcoin and crypto questions coming up towards the end. Very shortly, I'm going to get to, I think, what's going to be one of the more exciting aspects of the interview, relatively on longevity, medtech, and biotech. Before I get to that, since some of our participants are asking, who are guests that I would like to have on? Now, unfortunate, I don't really have a lot of YouTube subscribers, about 10,000, which I guess in the family office world is a lot, but broadly speaking, it's nothing. But some of you have influence and may know some of the people I would love to have on. It's a little bit of a chicken or egg thing. When I had on Michael Saylor about 1 3/4 years ago, I had like 1,000 subscribers, and Michael knew that, and he still came on. And he knew that I was going to ask him tough questions and it was going to be a long form interview. I will never forget Michael Saylor for that. He did me a great favor. And hopefully the interview was valuable mutually, although I know Fox News and others showed it when he had his transition or clips of it back earlier in the summer. But I do appreciate that. The challenge is, yeah, there's lots of great guests I would have on. And if you as my audience could help me, that would be great. They're probably going to look at my 10,000 subscribers as not being enough to justify their time. But I do bring up Michael Saylor as the example. I also have interviewed Tony Robbins and some other prominent people. And at my events, I've interviewed a truckload of the best known Peter Thiel and hedge fund managers and venture capitalists, etc. But if I had to give you off the top of my head, since that person asked, I would love to have on AOC. That will be a lot of fun. I'll always be respectful, but I would want to do a long form, very intense interview. Obviously, I'd love to have on Daddy Elon. Who knows what the future might hold? And maybe a little bit of 2 out of left field. And again, you never know who my audience knows, so perhaps you could help me. I would love to have on Dave Portnoy at Barstool Sports. I think what he's doing is interesting. And yes, in case you're all wondering, I'm just going to give the last name, but you'll know who I mean. I would love to go to a certain country where he's at and do a really deep dive interview with Tate. That would be probably my dream interview. I'm not going to mention which one of those 4 to 5 I've had prior communication with, and they were always a gentleman to me, and I greatly appreciate it. But they're a little harder to reach now than they were, let's say, 6 months ago. So you'll have to figure out who that person, male or female, may be. On that note, Now that we're done with that, JJ, let's get back into it. So
I got a suggestion. It relates back to the last question.
Go for it.
Mr. Beast. What if Mr.
Oh.
Beast became the CEO of Twitter? Because there's like some rumor about that, or someone made a joke. He would be awesome because he knows content creation. He's one of the greatest YouTubers who ever lived since he was like, I don't know, 13 or 14. And he would make Twitter better because he would know how to bring creator tools and bring real creators to the platform and real content. Because remember, the influencers are eating the world, quote.
That would be amazing. I would love to see that. Now, I'm assuming for my audience members that are over 30, they probably have no idea who Mr. Beast is. Go to YouTube, learn about it, an interesting character and really doing pretty amazing things. And again, the world is changing, and that's an example. Look at the rising generation, which is very large, of Gen Z, those under 24, and the impact that they're going to have moving forward. And again, we could save those discussions and other variations of it for a future time, but that was a great suggestion. So when it comes to longevity, medtech, and biotech, I'm someone who's very fascinated by anything pertaining to health and longevity. Thank you for putting your hat on so I'm not solo here, JJ.
You like the hat trick? I learned that from some TV program.
On and off. What's going on here that you think could be groundbreaking and could be maybe wonderful from an investing perspective, and kind of what I call that trio of longevity, medtech, and biotech?
Yeah, so I think that we need some kind of technology inflection, and maybe AI helps with it, but personalized medicine. And we spoke of personalized medicine before. I mean, I think you have many guests, and I think we even spoke of it on a previous podcast, maybe a year ago or so.
Longer, yeah.
If the AI can personalize the medicine, well, let's say we'll use cancer as an example. Like if you or I got cancer, unfortunately, what would cure or even ease or help your cancer may not help mine. And there's thousands of different kinds of cancers probably never heard of, and everybody's body is different. But what if AI could personalize a medicine / vaccine / treatment plan that could not only rid you of cancer, but maybe even rid you of aging? Because you know how some of them guys, and I think you had the guest that I forget his name, he wrote a book I read, said aging is a disease. So if we can cure aging,
maybe David Sinclair. Yes,
that's it, David Sinclair. If we can cure aging, have vaccines for stuff like cancer, Alzheimer's, Parkinson's, even heart disease, diabetes, but it would have to be personalized medicine for what people think is our genome, but who the hell knows? Maybe AI will find out it's our gut biome or a combination of stuff. And they used to say like our DNA was everything, but now they're saying our RNA is stuff. That's like the roadmap of our life or something. That if they can figure that out with AI, and it may take 5 or 10 years, maybe 20, maybe 50, but even at our ages, we're still young enough that if we live long enough to live that long, we'll make it to 120. If we make it to 120 with the breakthroughs, we might make it to 250 and then to 500, and then we'll be like 900 like Yoda in Star Wars. Because remember, the technology just goes like this, and then boom, all of a sudden, because we're having these gradual improvements over time that nobody sees, but we need that one breakthrough that just makes it all glue together and go woo.
We're going to get to one potential stock of a company that many of you know that both JJ and I feel has interesting potential. Now, the fact that we feel that way means probably the opposite's going to happen, but you have to do your own diligence and make your own decision, but you're going to hang on a minute or two before we get there. So you said it needs to be a big breakthrough, which will probably come through AI is going to need to be involved. And I'm thinking like eventually we're going to be there where it's like 3D printing of your organs, and like this hasn't been solved yet. I guess the AI is not good enough. There's issues relative to blood vessels and all that and nanobots, but we're eventually going to get there. Is that eventually going to be 2 years, 10 years, or 50 years? But like you said, it's going to boom. It's just going to happen, whether it's one of those years.
Right, and the gene editing too. I think there's some unintended consequences, but once they can figure out how there may be like a certain gene that they know, okay, because of your genetic makeup, because the AI shows with like a 90% probability that if this gene needs to be edited to prevent X, Y, Z. And remember too, before this happens, the speculation that all of this is going well will cause some of the investments to go exponentially higher, which could be a bubble, a major bubble. And then when we actually have the breakthrough, they start collapsing.
So, I mean, the hell with it. I'll mention 2 companies, CRISPR and Moderna. What do you think? is there potential for one of them or a company like them within 10 years, not that long of a time frame, to be one of the 10 largest companies in the world?
I think so. And the hard part is, even if we get our thesis right, we got to choose the right company also. So just because we chose CRISPR, the name of the technology, it might be a private company right now that hopefully goes public soon, that is doing incredible things with the CRISPR technology. That's the one. Or it may be a company we've never heard of. And it could be a company like Moderna gets a cancer vaccine right, but it doesn't work in everyone. So maybe when they first get it right and someone, survives because of it, like one person works, you get a major pop. But it also could be that the medicine becomes so expensive, like the government comes in and regulates it and says, oh, no, you got to make it this price. And we don't get what we thought out of the stock. But some company is going to find some kind of thing that works with everybody. And it may not even be the medicine company. It may be an AI company that becomes one of the top 10 companies. So it might be an AI company actually, and not the drug company, because everyone says it's going to be the drug company. And the next, big bubble is going to be like biotech for tech. Well, they might be right, but it might be the AI company that works with all of the medicines broadly at major scale that becomes $1 trillion company, and not the actual biotech company itself. Now, the biotech companies might get a pop on that, and some of them might create a bubble where they all just start rising like crazy. But
just think it's something that could be a major breakthrough in cancer. And I know we've been talking about that for a long time. But relative to what we're discussing, AI and a variety of other aspects, that would, depending on a variety of things, patents, et cetera, that would be one of the largest companies in the world in relatively a short order.
Or an aging company that cures the disease of aging and makes us all young forever. But not only young, because just because we live to be 900, we may be sorry we lived that extra 800 years, making the quality of life where we're not in pain and suffering for 800 years.
We could go on and on about, could the world support that? Population, wealth transfer, children, marriage, social interaction, religion. Are we going to have enough money? There's so many. We could just do a 2-hour podcast about that alone. So again, we'll have that hook in there for sometime in the future in 2023. I'm going back a little bit to our earlier discussion. You mentioned that, we've been through an amazing market, I guess, broadly here in the US, broadly speaking, in equities and I guess bonds for multiple decades. That can't last forever. There's going to be booms and busts. There's going to be mini bubbles, as you said. We may be heading into a period with rising interest rates, with recessions and again, tech stocks doing very bad, where things are going to be very rough for a period of time. But there will still within that be opportunities.
Oh, 100%. Bear market rallies and opportunities. And I have a theory, too, of why the U.S. stock market, for the most part, over time, has been a straight line up, basically since the Great Depression. It's because the United States has been very wise in opening the borders and letting qualified immigrants in.
And that appears to be somewhat changing in the last couple of years. And that relates also to an aging population.
Right. So that's one solution, just to keep those borders open for qualified people and let them in, bring in young, smart students over, put them into tech companies.
Yeah. My little pushback on that is, what's defined as qualified? There's many people that were dirt poor, blue collar immigrants that came here that are great people, that work hard, that contribute to society and community, have children, and those children then go on to potentially do something that is more exponential. But we don't know that until potentially decades out.
Right. So qualified means they just don't walk across the line and say, thank you, we're here. That they go through a process where they're legally made part of the United States.
Okay. What are, not one, I'm going to ask you for two. What are two concerns or problems that keep you awake at night? What are you worrying about?
So yeah, everybody says keep you awake at night. I wonder how many people actually aren't sleeping. But in the scenario, I guess, where interest rates did get out of control, like, where all this quantitative easing and all this, I guess, buying of the bonds and, alleged printing of the money and all got out of control, and interest rates really did go to 20%. Obviously, that probably would not be good for tech stocks, for the S&P as a whole. It probably would not be very good for crypto. And I think the speed of that would matter, because if it happens gradually and it starts to get priced, so markets are always based relative to expectations. So if everybody expects it to happen, it's not as bad if it happens, but no one expects it, and that's the problem. So as far as markets go, something like that, or some kind of, I guess, black swan into the system where it's a contagion of like ridiculous counterparty risk, and it doesn't necessarily got to be crypto, that just contagions the whole system. But then if that happened, I guess the Fed would have to step in and have to support the markets and lower the interest rates back to zero. So in longer term, that might be good. So that would be one thing. And another thing too is, just coming from zero, basically, literally from zero. It's not like Shelby Davis, who still was one of the greatest investors who ever lived. And in I think it was 38, he got a $50,000, what do they call it, dowry. Well, $50,000 in 1938, probably like 500,000 or 900,000 a day. Imagine starting with that, but starting with nothing, it becomes really hard to get the 8-9 figure level, let alone a billion. So sometimes the ambition to become a billionaire from nothing, it takes a lot of focus and a lot of determination. So it may take away from stuff like, you finding your true love in life or something like that. Now, of course, we all have to be 900. You got plenty of years, so, and even at my age, you still have a lot of years, but it is, your ambition to become a billionaire, I think, can get you in trouble. I mean, just look at even some like I'll call them mega billionaires, the centibillionaires, or at least were centibillionaires at one time, like the Bill Gateses and the Jeff Bezos and the daddy Elons. They've all, got divorced. And if now we're finding out throughout the years of their marriage, some of them stayed because of the children or whatever. And when the children got to a certain age, then they got divorced. So, the ambition, just to be a billionaire. And sometimes too, it's never enough. So, you say, oh, I want to get to $1 billion. And then when someone gets to $1 billion, they say, oh, I need to get to 10 billion. Or this, like one of my things was getting on the Forbes 400. Well, the Forbes 400 keeps moving. Like now it's 2.7 billion, in 10 years, if I got to $1 billion, like say by 2030, the Forbes 400 might be 12 billion. So I won't even be close. And then I'll be running around saying $1 billion isn't rich, that 8 billion is rich, or 12 billion is rich. So the bar keeps moving too. And maybe that's a problem.
I hear what you're saying, and you are correct. And I know what I'm going to say is going to come across the wrong way to people. And I hinted at it earlier when I was giving a little bit of advice to the younger ones. The reality is, relative in today's world, about how it's all coming to one, we're losing a level of our freedoms. We're getting safety in return for a loss of freedoms. And one thing, and this may change with one day a one world coin and central bank digital currencies. We're not really going to have the time to get too deeply into that. But the reality is 99% plus of you do not have enough money. Do not. And I know that may not be a politically good thing to say. It's just a reality of it. What is that amount of money that would give you some level of freedoms? And again, I do agree a family office is 750 million or more in the true definition. I would say from most individuals' perspective, it's probably tens of millions. So again, by the very nature, 99.8 or 9% of people are not going to have that. Now, do you make sacrifices to your personal life to potentially reach that? What have you given up? That's going to be a decision that you're going to have to make. And again, I'm going to do more on my perspective of disaster prep for billionaires and those that want to be, and looking at things from Black Swan and other perspectives upcoming in 2023. I do a fair amount of it now for my members at Family Office Association and some one-off consulting assignments, but I'll make some of it a little bit more public in my more public platforms. Let me bring up one or two companies that are among the largest companies in the world. And again, putting on a crystal ball hat, do you think that they could still be so in 5 or 10 years, or they may become stagnant? I'm going to mention one, Amazon. What do you think?
So I'm going to answer that in 1 second. But the last thing you said, I think the interest rates actually matter. So like if interest rates are 6%, so I have a friend that says 30 million is enough, and I disagree with him. If interest rates are 6%, it may be enough, but maybe not. If interest rates are 0, it's definitely not enough. So anyway, to go to the Amazon thing, I think Amazon, this is going to be very unpopular, could end up like Walmart, where the stock price, now this has nothing to do with the company, the stock price could become stagnant in a range for decades.
Wow. I'm glad I brought them up. That was an interesting comment that you made.
But the company is an incredibly great company, has AWS. But, one thing that really helped Amazon was the startup boom with the 0% interest rates. Now, if interest rates were to go back to zero, then that totally changes the narrative. And yeah, it's party on for Amazon. But if interest rates are a real rate, like 4-6% or whatever, it's very possible that Amazon could just stay in a range for decades and maybe even end up turning into a company that pays a dividend the way Mr. Softy did. And by the way, didn't Mr. Softy stay in a range for decades or many years?
Probably so. I guess that's Microsoft for those that haven't figured
Yes.
it out. Okay. BlackRock CEO Larry Fink has stated the next generation for the markets, the next generation for securities will be the tokenization of securities. Do you agree?
Yes. And when he says tokenization, I think it'll be forced. So what I mean by that is like when you buy and sell stocks on the NASDAQ, they will settle because they will settle like either same day or maybe even instantly, but probably initially same day. And tokenization, I believe Goldman Sachs has some kind of patent on settlement. But yes, things like that will be tokenized for instant settlement. And also payments will be tokenized too. And it may be on different ledgers. Like some payments may settle on Ethereum, maybe Visa and MasterCard, just to make an example, who knows. And maybe like overseas, some things will settle to the XRPL ledger for Ripple. And now that does not mean XRP, the currency, becomes great. Maybe it does. But the technology of the XRPL ledger is definitely part of the future, definitely part of CBDCs. And it's IOSO 2022, or whatever the hell that shit is, compliant.
For sure. We probably have ballpark about 15 minutes. Why don't we go a little quick and round robin on a series of questions? I do want to give a shout out to our mutual friend, JC. I don't know if he wants his last name noted, but JC at BundleFi, a really deep thinker, wonderful investor in his own right. And he had some great questions that he submitted that I do want to share them with you. Are you ready, JC? The week's news that with the NASDAQ article out that two pools control 51%. That's 51% of Bitcoin mining. Like, shouldn't we be concerned?
So those articles, I think they said of the hash rate, but remember, those are pools. Those aren't individual miners. And I don't know how many people are in. I think it's like the Ant pool and the Foundry pool. I don't know how many individual miners are in there. And the mining, they measure by exahash. So I guess they control supposedly 51% of the hash rate. And by the way, that stuff changes all the time too. I don't know, because I guess they're kind of inferring by that article that they could do a 51% attack. And a lot of people don't realize even with a 38% attack, you could have it for a couple of hours.
Do some damage.
But if something like that were to actually happen, first of all, it's very costly. And would all the miners contribute? I mean, I don't know. If I was a miner, why would I contribute to that? What's my incentive? Maybe I just turn off my machine. And if that did happen, the Bitcoin network as a group could just say, hey, we don't recognize this. They could fork the chain. They could take the ledger right before it happened, download that, fork the chain, and say, this is the real Bitcoin. So I don't know how much of a danger that is. I think if something like that would happen, though, maybe, all the proof of stake people and the people are saying Bitcoin waste energy and all this crap, even though, the fact or alive waste more energy, and all the electricity the banks use and the people driving to work and the credit card system, probably multiples of the Bitcoin network. Maybe they use that as an excuse to go to a hybrid, I call it a hybrid consensus mechanism, where it would be a hybrid proof of stake, proof of work. The reason I don't think it'd be 100% proof of stake is because for the security of the Bitcoin network, you do need some proof of work. And maybe also they'll use federated side chains where, let's say, like transactions under a certain, I'll just make it up, like $50 are all done off chain and put on the ledger at the end of the day because they're not really all that important, each individual $50 transaction. But the really large transactions have to be on chain and done proof of work.
If Bitcoin is the future, why do so many miners, from what we could gather, sell potentially whatever, like 90% more of what they mine?
Yeah, so I would like to see the source of that, because I don't know that all the miners sell 90% of the Bitcoin they mine. But that being said, they would sell some, especially when it's not a bull market, just going straight up. Now, if you're like a miner and you're getting investment from VCs and stuff, maybe you can pay your bills out of what I'll call the VC subsidy. But if you're a minor operating as a business and you're not taking in investment dollars at this point in time or able to get debt, then you have electricity costs. Maybe you borrowed money to buy the equipment. Maybe you rented the equipment. Maybe you're using data centers and cloud services. So you have to, depending on what kind of mining you're doing, so you have to pay the bills. So you are going to probably have to sell some of the Bitcoin you mine. So it's just like, any business makes XYZ widget or produces XYZ product. They have costs they have to meet.
You kind of answered this one already, but it'll be asked a little differently. With Twitter soon to evolve into X.com, how do you see that playing into both traditional space along with the digital asset community?
Yeah, so I don't know if they're officially, but I know that back in the day, I think Daddy Elon was like a founder of X.com. I don't know, maybe he still owns a domain or something, who knows? And, I've heard stuff, like on the internet, about that. But the thing is, I really think that with the distribution, Twitter will become a payment network of sorts, and maybe even incorporated into Tesla and Starlink, and maybe even Boring Tunnel if you want to travel through the tunnel, or Neuralink if you want to upload your conscience or whatever. But
come on, how about Doge? Is Doge going to be involved?
So I do think that the Doge coin maybe, or maybe even the Doge protocol, there'll be a blockchain or something where you could even have like Daddy Elon coin, just to be funny, because simple ironic or you could have Twitter coin for payments in the network, and then even on Mars and all this other good stuff. So I do think that payments is definitely going to be incorporated into Twitter, and maybe even creator compensation. That's why they should bring in Mr. Beast as CEO. Plug in Mr. Beast.
Exactly.
I don't even know that guy. I'm plugging him. And so yes, I do think that Twitter is going to bring in the payments, if that's what he's asking. And maybe that's part of his plan for the distribution network, but it'll be more than payments that's distributed. You could even distribute other things. You know how we have like all these apps that the young people like to use for these AI things, and they make it different them, and you see all these people using it. That could all be ran through Twitter too. It could be a massive distribution.
How much of a contagion effect does the FTX disaster have on the markets?
So I think when you say the markets, do you mean just the crypto markets or the broader markets?
Both.
Like the capital markets.
Both.
So in the capital markets, I think that's really unknown, because we don't know if there's any counterparty out there who's a risk to another counterparty. Now people say, oh, that's crazy. The crypto's so small, it can't be contagion. That's not necessarily true, because there's a bank called Silvergate who had a lot of depositors that were crypto people that, supposedly they don't have any, I guess, counterparty risk to those. But how do we know there ain't some other bank that through some special purpose vehicle or shadowy system, maybe even somewhere else outside the United States, that has counterparty risk that the major global banks have exposure to, where it just spreads? Now, inside of crypto, I guess it really all depends on how this FTX unwinds. Does it cause like a Tether or another exchange to go down? Does it cause, like a well-known crypto company that has over-the-counter trading assets now to go down? I mean, we don't know the answer to that. And it's possible that all those could go down, but could go down in an orderly fashion where it doesn't affect anybody too bad. Because have you noticed that Bitcoin and Ethereum have been in a really tight range ever since the FTX thing? I mean, they might have had a fall in the beginning, but Ethereum has really been in that 11, 1250, 100, 1250 range. You could even make it tighter, 1170, maybe 1250. It's really been tight.
I mean, given that I am the founder of Family Office Association, and hopefully a lot of the topics that we covered today are absolutely applicable, from looking at things from a macro picture, an investment picture, to family offices. That being said, if you had to give from the perspective of maybe a commentary to the single family office community, maybe more so from an investing perspective, what would it be? Now, I don't want to cloud your point of view, but you have heard me say this already. A lot of them are, hey, we're already rich. We're in the wealth preservation business. And I hear them and I get it. And I do believe that T&E and tax and diversity and the opportunity of limiting what could be, or you can never totally eliminate, but hopefully somewhat containing fat tail risk and major downturns are all going to be important. That being said, if you play it very, very conservative, relative to inflation and other factors occurring, including distributions, and you're going to get 4 to 5% a year for 15, 20 years, you are going to lose purchasing power. And that's going to be a challenge, I think, with many family offices. I find that a lot of the executives tell me, Angelo, I got a 3 to 5 year one left and I'm out. I don't care. I just want to play it very safe, very conservative. Yes, you're right long term, but I'm not going to be around to have to worry about that. And I think that's terrible. Like, I'm not saying I do not agree with that philosophy at all, but that does mean that you have to have an open discussion with the family members who are the ones that are going to be impacted by this. And how do you have a balance of growth yet preservation?
Right. So that goes to a few things. For one, incentives. So this person's incentives are misaligned. So it goes back to all this IRR with VC firms and all that, maximizing for IRR. To me, it's how many dollars you put in, how many dollars you get back. Now, some people like to measure that through DPI, but regardless, what I'm getting at is this person's incentives are misaligned. They just want to get through the next 2 to 5 years, get their paycheck, get their bonus, say thanks for the memories, and they're not worried about the long-term wealth of the family. So rule number one of any family office, and if you define family offices like 8 figures or more, a lot of us are technically family offices, is drink from the river of money. So cash flow is king. In times of distress, you have to have the cash to be able to buy the assets at the right price, because you make money buying anything at the right price, including the things we talked about like Moderna and CRISPR, whatever. If they fall like 80 or 90% from here, yeah, they're probably a bot. So buying at the right price, drinking from the river of money, so you have the cash flow to be able to take advantage of the opportunities. And then you kind of mentioned the two. Rule number 2, don't lose purchasing power. So even if you're worth like $1 billion a day personally, or $10 billion, if you lose 90% of your purchasing power, you're way worse than you were. So you have to find a way to at least maintain purchasing power. So you know how Warren Buffett says rule number 1, don't lose money. I guess in the next, say, 50 years, especially for these families, depending on their goal, and if they want to have a legacy, it's don't lose purchasing power, because you have to have the purchasing power to maintain not only your lifestyle, but the future generation's lifestyle. So they have to keep drinking from the river of money so they have the capital when time comes. Because even right now, if they're sitting in, let's just call it $1 billion in cash, if for some reason we had the massive inflation and they didn't have their money in gaining 20% or whatever, if the interest rates went that high and they're just waiting for the opportunity, they're not going to be able to buy what they could have bought today.
For sure, for sure.
And they're going to need a massive black swan to buy everything at like 90 cents down. So I guess that's 10 cents on the dollar. But what if that doesn't happen? So there's got to be a balance. I think I've talked about too the 70-20-10. So 70% core, whatever you're doing, 20% complementary, and 10% other bets. And hopefully the 10% other bets, the power law, that you pick something right, that it gives you enough gains to take care of the rest. So if your 70% of the core maintains your stability and your wealth, and the 20% complementary helps augment that with some cash flow and helps you drink from the river of money, the 10% other bets, if that pays off, that should maintain your purchasing power over generations.
Yeah, I mean, someone was asking, and I'll answer it. Sure. If you know a well-known and prominent investor or one that's good, absolutely make an intro. There's nothing quite like actually interviewing people that are investors. Now, there is a difference, even when they're a big name, but they're behind a fund. I mean, they have a commercial perspective. They benefit from money coming in. What I really like about real family offices and great investors like JJ is they have no incentive. They have nothing to sell you. If anything, honestly, they probably prefer that you don't even reach out to them. They don't want to be bothered. Maybe follow them on their social media platforms if that's what they're interested in. But that is the ultimate, when I can have someone on who has absolutely nothing to offer, and probably there's a negative for them even being on, but maybe out of a little bit of respect for me and my relationship with them, or wanting to benefit some of the young ones growing up and things that they could share and impart knowledge, they're willing to do it more so from that perspective than they want to get more AUM. But that being said, there is someone that I think we're both a fan of, and I would love to have him on as well, and that would be Jeffrey Gundlach, who I think does, of course, none of us agree with everything that he says, and some things he's been way off. But I like the fact that he puts himself out there. So you've been following him too. What has been some of his outlook for the upcoming year in 2023, and where would you maybe differ?
Yeah, so I really like Jeffrey Gundlach. He's a really smart guy. He doesn't follow necessarily what everyone else says. And on January the 10th, Double Line, his company, is having like a webcast to talk about his 2023 outlook and all that stuff.
Ooh, can't wait.
Yeah, so it'll be interesting to see what he says. I know in the past he's talked about, I don't know, I think it was him. Wasn't he the one that said 25% cash, 25% gold, 25% stocks, 25% bonds? And he said if you wanted to break it up. Recently, I saw him on TV, and I may be getting some of it mixed up about that percentage thing I just said. He was talking about now might be a good time to go into, if you wanted to. And remember, he's the bond king, emergent market bonds. I'm wondering if it may not be the time if the dollar backs off some. But remember, the dollar has to back off some. And if interest rates have fallen a little bit on the 10-year, and it seems like the dollar is highly correlated to the interest rates, I don't know what the R squared is to that. But if interest rates were to fall and the dollar were to get weaker, maybe emerging markets finally play catch up. I don't know if I agree with that or not. He seems to be into that call. I'm not 100% sure if I'm on board with that. I think I'd rather just be in gold.
Yeah, like I'm looking at some of his comments from, I think about 2 weeks ago. He expects a recession by the middle of 2023. He does go into some of the detail that I won't bother the people with now. He does expect lower inflation upcoming. I believe the time he did this, it was 7.7%. He thinks that by May, the headline CPI will be less than 4%. That's pretty shocking. Do you agree with him?
Well, that's 7.7. I do think that however they measure it, they may make it lower because, you know, they control all that. They may make it lower by that time frame. Now, the headline CPI, I think it largely depends on if the Fed wants to, because they control that too. If the Fed wants to slow down raising, and it does seem like the Fed does want to slow down raising. So I think it's possible. So I'm kind of neutral to that. I see what he's saying about the recession, but you have to define what is a recession because we don't even know what the hell a recession is anymore. But I guess in common sense way, for a lot of people, we are in a recession. For the average man, will happen in 2023.
Yes, I would look at it and say that.
But just because there's a recession on the news doesn't mean that the stocks and all the investments go bad. That's why I'm saying, like, everyone says that we might have like a bear market rally, like a suckers rally, and something like the NASDAQ, maybe not the NASDAQ as a whole, but maybe some of the high flying stocks like Kathy Wood's ARK could have like a 50% bounce in some of the cryptos. Or even like Bitcoin could almost have 100% bounce, or a 50 to 100% bounce, go to 25, I guess 30,000 as a suckers rally, and everybody says, "Oh, bull market on," and then we turn around and it goes backwards again. It's just like in the last couple of weeks, NFTs have actually had a massive rally. A lot of them.
Yes, I was gonna kind of bring that up, but every time I do, I get some interesting comments from people. Yeah, he actually, meaning Gunlock, talks about that we might even hit sooner rather than later. It's pretty shocking. Forget the 4%. He's talking about a deflationary period as well.
And depending on his time frame, I could see that. And it depends on what we're measuring as deflationary. Because, you know, before all this, everyone said we're having what's it called? Inflation now. And we talked about technology being deflationary. Yes, some things will be deflationary, but I would bet the average man claims we had inflation. So if your healthcare costs are going up, the education costs of the kids are going up, that's inflationary in those sectors. But I could absolutely see deflationary in consumer goods happening before the end of 2023.
Interesting.
Because the supply chain and the cost of goods does seem to be coming down. And remember within the market infrastructure. So
supply and demand within the market infrastructure.
Right.
Don't forget that, audience.
So if the supply chain costs come down, then some of these companies can keep some of the margin, but lower some of the cost for what I'll call the good overall goodwill of the people, and to keep the government off their backs.
Wow, this has been a pretty amazing 2 hours. We also, put out the fishing line there for 3 or 4 topics. We could do a deeper dive heading into 2023. This has been a great way for me to wrap up our year from my podcasting perspective, and very much looking forward to early 2023. JJ, before I go into my close, did you want to do a wrap? And if you're interested, for those that may have an interest in learning more about you and following you, any social handles they could follow?
Yeah, so Twitter is pseudo anonymous. So even all those people who think they're anonymous by the Twitter, they ain't really anonymous. If somebody wants to figure it out, they really can. So, I don't go around advertising it. So, not for people to tag me on there, but if they want to follow at Primal Key on Twitter, it is known by some people that I am Primal Key. Some people know, some people don't, but they can follow Primal Key on Twitter. And if they want to send a DM with a question or something, just don't at me on there and say my name. But if they can follow Primal Key on Twitter,
we'll ban their ass.
And I wouldn't ban their ass. And then I guess as closing thoughts, anything anyone says, just think for yourself. And things are always evolving and changing too. I think it was one of the guys said, I don't know if it was Keynes or somebody, when the situation changes, so do I. What do you do, sir? Or something. I remember reading that as a child or something like that. But think for yourself. And obviously everyone has their own personal circumstances. And just don't get into a situation where one over leverages themselves, that when the markets go against you, you have no choice but to be wrecked. Basically a term they like to use in crypto, wrecked. But I guess they use reeling in the family office world. That just think for yourself and stay positive. And just like I always say this, but contrary to popular belief, things are never as bad as everybody says. Never. And there's always, I think Jim Cramer says, there's always a bull market somewhere, and that's true. I remember in the past, bull markets make genius of everyone. So when the interest rates were zero and everyone was making mad money, doesn't mean any of us were a genius. Most of us, including myself, we're lucky in a lot of things. A lot of it's luck and the right timing, and you have to catch a tailwind.
100%. And you're very modest in terms of your approach with that. It's been, again, JJ Sowers, everyone. He's been a longtime friend. We haven't had him on the podcast in a while. This has been a great 2 hours to wrap up 2022. Very much looking forward to 2023. Like I did say earlier, again, this is meant for entertainment purposes. This specific point in time, our opinions could radically change the same day. Who knows? Again, like poker, new information comes in, you have to adapt. And JJ just hinted at that as well. You got to be very careful about not staying close-minded, for lack of a better word, and be open to new things. So again, when you invest, you could lose money. You absolutely need to make your own decisions, think for yourself, and do very proper due diligence before you make that decision. That's all on you. Well, I hope you really enjoyed this interview. This was a lot of fun. I know the last couple of months, I've not done as many as I've done earlier in the year or the prior 2 years. A part of that is I rather make the ones I do more impactful. And the other part is I've been extremely active at Family Office Association, traveling 17 times on a plane this year, recently coming back from Art Basel, Miami, and LA, and hosting a lot of different events. And that's been fun. I do kind of love the stage. I love in person. I love interacting, but I also do love the deeper dives that I could do from a digital perspective. And having now done this interview with JJ, it gets me excited about other opportunities and interviews that I have upcoming in 2023. I think the prior one I did about 3 weeks ago was with, I know that JJ's a fan of his Twitter. He's kind of a crazy former hedge fund manager, and I mean that respectfully, an economic thinker and family office himself now, Hugh Hendry. So I think Hugh is great. I really enjoyed my near 2 hour interview with him as well. That went in many different directions, including music and tequila. If you haven't heard it, it is up on my YouTube platform. But this one with JJ is fantastic. It's one for the books. I hope you enjoyed it. Everyone, I'm Angelo Robles. I'm the host of the Angelo Robles podcast. I'm the founder and CEO at Family Office Association. We're a global membership organization dedicated to highly successful families. We put together special digital content, thought leadership, in-person events, and connectivity among highly successful people and those that are intertwined in that community. Go on our website, which has since been updated, at FamilyOfficeAssociation.com. And I have multiple platforms, both individually and at Family Office Association on social media. Many of you know me, of course, on Instagram, where it strictly is personal. It's meant to be a little tongue-in-cheek, and I probably go more into my philosophy and health advice and things that I do from there than business, but occasionally I'll do a little dive from a business perspective. You'll find me if you want. On Twitter, I'm at Family Office. On YouTube, we're at Family Office. And on LinkedIn, which is my largest network, both from a personal and a business side, you could find me both as Angelo Robles and again as Family Office Association. Reach out to me anytime, especially with guest suggestions. And if any of you ever get those guests that I noted earlier and help to make that happen, I will really owe you. So the best way to contact me is via email. There's multiple, and social media DMs are fine as well. But the email is angelo@familyofficeassociation.com. And my number, I'm not afraid to give it away, it's up on our website anyway, is 203-570-2898. On that note, this has been a blast. We hope you enjoyed it. And again, JJ, thanks for your very generous with your time today. I appreciate it.
Oh, thanks for having me.
My pleasure. Keep on wearing the hat. Cabana Mac out.